Hello and welcome back to another SCAG Academy video lesson. In today's video, we're going to discuss the four market cycles. These four market cycles basically make up the way that price behaves 90 to 95% of the time, right? It's always going to be doing one of these four things. And if we can accurately, understand what the market is currently doing, then we can have a pretty good idea of where it is going to be going next, what its next move is, based on where we are in this cycle. So let's jump right into this, guys. It's going to be a pretty quick lesson. We're going to start with the first cycle, which is going to be an accumulation cycle. Now, accumulation, guys, is going to be just a trading range where supply starts to contract against demand until all of that available supply is absorbed by those smart money interests, and then leads us to a markup cycle, right, which will be our next cycle. So just the important thing to understand in an accumulation, right, is that supply is starting to contract against demand, and that's going to lead us to this next cycle, which again is that markup cycle, right? So this is actually a trending cycle, right, after accumulation, and this brings us higher price with concentrated effort, right? Which basically just means it's creating higher highs and higher lows on consistent volume. And by consistent volume, we also mean consistent effort, right? As that markup phase continues and goes on, it will eventually lead us to the third phase, which will be a distribution, and a distribution range where supply starts to overtake demand, right? This is basically the opposite of accumulation, where in accumulation you start to have supply contract against demand. Here, that supply starts to overtake demand until the supply becomes so much that prices have to fall to find more sustainable demand levels, right? So this ultimately brings us to, again, the opposite of what the markup is, right? The markdown period until substantial demand could be met, right? So after this distribution forms and the market becomes oversupplied, there's just too much of an asset in comparison to the demand, we start to mark down, and this leads us to another trending cycle, right? So a trending cycle after distribution that brings price lower, again with concentrated effort, which is going to be creating lower highs and lower lows, again on that consistent volume and effort. So these four things make up the entire basic price cycle. Just off of this, we can see that in the cycle here, we have accumulation, which is a cause, and the markup, which is the effect, right? So if we know that we're building an accumulation cause, we know that the effect of that is very likely going to be a markup, which could eventually lead to another cause of distribution forming down to a markdown. Price, again, is always doing one of these four things. There are additional cycles that we will talk about later in the course, but those are sub-cycles to what's already happening here, right? So this is the basic price cycle. Familiarize yourself with it. This way, when you hear terms like accumulation, markup, distribution, markdown, you have an idea of where we are in this and what we're actually expecting the market to do going forward. So that being said, guys, this lesson is complete. We will see you over in the next video. Hope you guys enjoyed. If there's any questions, comments, concerns, feel free to leave them below or let me know in the Discord. See you guys in the next lesson.